Big tech stocks you might have heard about, like an Amazon, a Microsoft, a Meta, whatever, up 1.25%. And oh, by the way, some of those big tech names are on the docket to report their results this week. We don't mention that by accident. We mention it because this guy right here, it's cue the animation market navigator, Dom Chu, who's taller in real life than he looks compared to the cube, because on the cube.
But I'm not as tall as you are. You are a tall man, Brian.
Yeah, there's a lot going on. It's not good. It's not good. It's not good.
All right, let's get it back to business here, because as Brian mentioned, it is a big week for tech earnings. Amazon is set to release their fourth quarter results on Thursday after the closing bell. Those shares are already up 40% in the past 12 months and more than 135% over the past 5 years. So our next guest says the online giant and web services cloud computing giant has a big base for a possible breakout, and she believes those shares have room to run. So joining us is Jessica Inskip, Director of Research over at stockbrokers.com. Jessica, this story for Amazon is one that's a catch-up story, right? It had been lagging for a number of years to its Mag 7 peers, but now it's finally caught up. But you think there's more room to run. I'd like to know why.
Yeah, absolutely. It's looking at the chart from a relative basis. So I'm looking at Amazon relative to the broader market, S&P 500. We had a large area of resistance that was formed around the beginning of 2020. Then that contributed to a lower high in the 2022 decline that we had for all of tech. And then that was a key area of resistance for 2024. So we just broke out of that through the end of the year. And now it's been tested once more and has been support. So that is a huge, what I like to call big base breakout when we compare it relative to the S&P 500. Right. Kind of like a technician's way of PE ratio.
All right. So if you're looking at it that way, then, okay, that means buy the stock, right? But you're thinking not necessarily just buy the stock, but get exposure another way.
Absolutely. So earnings is coming up this week for Amazon. And when we're looking at options and we want to utilize options to deploy any type of strategy, there is a other component that inflates premium, which is implied volatility, which happens around earnings. Right now, there's an implied move of about $16, which means it's reflected within the options pricing, even if we're going out further. So the way that I want to position this is actually to pay for long directional speculative exposure via a cash secured put through what's called a long synthetic stock position. It's 2 options trades that I'm happy to walk you through.
Right.
So
yeah, go through them.
Go ahead.
Go through them. Yeah.
So I'm looking at about 38 days out, close to the money, which just means the same strike price as the stock price, so 240 earlier today. If I were to just buy those calls expiring March 14th, it would cost me around $12. I have unlimited upside, but I'm actually not going to start capturing that once that volatility crush happens post earnings, as in premiums are going to deflate, which means I need the stock to move $12, which it could do, but that's still a big move just for me to break even. So the way that I want to fund that is I'm actually going to sell a cash secured put. I'm going to, the same strike, same expiration, I'm going to collect about $11 for that, which means altogether it's going to cost me $1.45 per share. So 100 shares, $145 total to get a directional exposure with unlimited upside like that long call has. I still have, of course, stock ownership risk if it were to move adversely. That's why the profit and loss diagram looks identical to owning a stock long. However, if you utilize options this way, I can set aside my cash in T-bills. It doesn't have to sit in a stock. It sits as collateral until I am assigned. If I'm assigned, otherwise I capture the upwards potential if there is a bullish earnings move with very, very little cost this week.
All right. I like it. Jessica using those components to build what would effectively be an ownership position. Jessica Inskip, thank you very much. We'll see you soon.